why Calgary real estate is a safe investment for 2026 and beyond. We did this seminar because, of course, it's the end of 2025. We're looking forward to 2026. Our investors are, making their goals right now, setting their goals for what they're going to do, if they're going to buy a new property, if they're going to rearrange the properties that they have right now going into 2026. It's a great time to do it when things start to slow down over the Christmas season. So we're doing this seminar to help you guys find reasons to keep going in 2026.
Yeah, and that's perfect, Tim. Setting goals is the first step, seeing where you're at financially and working out how you can get there.
We're very excited about 2026. We expect good things, and we're going to go over some of the factors that we think is going to make the market very, very investor friendly coming up next year. Okay, let me get my notes here. So we're going to start off talking about demographics.
All right, let's talk about demand. Net migration. So this has been huge for Calgary. We have far more people moving here than we have moving away. And reason for that being the things that we were just talking about, affordability, the access to jobs, and the quality of life.
Awesome.
Yeah, and part of that demand, we've got the migration, which we mentioned earlier. Natural population growth in Calgary is also quite strong. That's births over deaths. And it's from accelerated household formation, which means people having more people in a household, bringing in family from abroad, bringing in family from other provinces. So we're seeing a lot of diverse demand happen in Calgary. It's not just, the traditional, two young people move here after college, they get married and they start a household. All kinds of different people are moving here. So it gives our population base more diversity, and it gives investors more choice about the properties that they're going to buy.
Yeah, and you know what I love about this slide here, with people moving here, if you went to Stampede this year, you just had to walk around. I've never seen so many people from so many different places before, ever. And I've been going to Stampede for 25 years. I mean, I loved it. And what it tells me is that, investing in certain pockets where you have communities like a Filipino community, an Indian community, there's got to be a Ukrainian community somewhere here. I know they're scattered around, but investing in these little pockets, it could pay off because when people move here, they want to be around family members. And you know what? It's not a bad idea to invest in some of those areas, especially, in the Northeast. There's really, really good pockets. We know for a long time, parts of the Northeast has got a bad rap. Yes, there's areas we would stay away from, but there's communities up there in areas that are just definitely going to thrive just because of the affordability, the size of the home, and then the area you're in. You're going to see these areas populate more and do better overall as well.
Yeah, and the thing about Calgary, this population growth, it's not a one-off. It's structural now within Calgary. We're at a large enough population base that we're going to continue to grow and, have more and more people coming in, and there's going to be more and more demand for rentals. So that's a very, very positive thing for real estate investors out there. The next thing we're going to talk about is jobs and our economic base. Now, Calgary, most people think of it as an oil city. Well, we are an oil city, but we're becoming more and more diverse as time goes on. All you have to do is look around, look at the industrial areas and see the warehousing that we're getting come in here, the service industry that helps the oil industry, and things like healthcare. We've got huge hospitals and research centers in Calgary. We've got the new cancer center, we've got the children's hospital. So all of these sectors of the economy generate growth in the city. And, because we can offer those types of jobs to incoming residents, it just helps real estate investors because there's more and more people coming in, more demand for rentals.
Yeah, I mean, I was reading just on schools alone, we have a shortage of schools and they're going to be building so many more schools. And then I know Tim's got a picture of a guy in what would you call that, tractor or digger? Backhoe, there you go.
Or an excavator.
Yeah, I mean, if you've driven through downtown, I mean, across the road from us, we've got two lots right now. One building's getting torn down. So two projects just across the road. You go down 11th Ave, we pick on 11th Ave a lot, but you can't even get down through there because two lanes are closed most of the time because they're knocking down 5 or 6 buildings just on one avenue. So it's very, very exciting that you see these empty parking lots or these spaces at Calgary that has just been sitting dormant for so long that we're going to go through this transition. I don't think we have enough construction workers in the city to pull off what's about to happen, let alone with the building going around out in the communities, right? We're going to talk about big ticket items that are getting built in the city as well, but just the construction side of things is just going to go through the roof, and the employment just with that alone, people will be moving here for that.
Yeah.
What do you got, Carly?
I think that Calgary is becoming attractive, right? People are moving here because there are lots of different reasons to move here, lots of different jobs, lots of different sectors, and work from home. That's a big one too. So because people can work from home, they can live anywhere. So why not live somewhere where you can purchase something, where you have a backyard, you've got lots of space instead of sitting in a tiny apartment.
Yeah, and just to add to that, I don't know about you guys, but the food scene here in Calgary is just getting better and better. And when you see that happening, that means that people moving here need to be serviced. So the service providers, if it's food, if it's medical, if it's teaching, whatever it is, we're going to need more and more of it. And for the first time, what we're seeing is that population's coming in, but job growth is still going on. So that will just fuel itself and make it even a better place to live.
Yeah, so the price of oil may crater at some point in 2026, but because of this diversification, it's not going to crater the whole city's economy. We've got enough diversification out there that we can keep the economy chugging along through high oil prices and low oil prices. And that's a positive for the city of Calgary. It hasn't happened overnight. It's taken generations to change from being like a cow town to where we are now. And all like you have to do is, like as I said, just go check out the restaurant scene. We're not just steakhouses anymore.
Yeah.
Yeah. Okay, so the next thing we're going to talk about is the housing supply. Um, One thing I want to focus on here is the record multifamily completions that happened in 2024. Over 10,000 new rental units were completed in 2024. That's triple of what was done in 2023. And in 2025, from the latest stats I had, there were 15,000 purpose-built rental apartment units under construction, with 3,000 completed already. I think these stats were from the middle of the year. So by the end of the year, we're going to surpass that 10,000 unit number from 2024. So, like as I had mentioned earlier on about the MLI Select program and the other incentives various levels of government are providing these developers, we're seeing a massive amount of purpose-built rental units coming online.
Yeah, so what that's done, just for everybody out there to understand, an average two-bedroom condo in the peak last year, early last year, hit about $2,400 per month for rent. That'd be two bedroom, two bathrooms, say 1,000 square feet. That's dropped to under $2,000. So in 1 year, a year's lease, and that's why we're proactive if our clients have any properties like that. And this can affect basement suites as well. We're seeing it in that. Main floor suites, maybe not so much, just a little bit, but rents have come down in some sectors, $400 to $500 per month. So when we buy properties for our clients, we're factoring all of this in. We're factoring the supply in newer communities. We're not even touching new communities unless our clients are moving into the property. We won't be touching. And there's great deals. And for everyone out there on what that looks like, a half duplex brand new was selling for, with a legal basement suite, was selling up to 750,000. In the last year and a bit, it's dropped close to $100,000. So that is absolutely huge. And the scary thing about it, they're just going to keep building more and more. But on the opposite end of that, if you're building a detached home and you're in more of an upmarket community, you can't build for the same cost of buying secondhand right now. So for example, I know up in say Aspen Woods on the west side, to build a 3,000 square foot home, you're looking over 2.4 million to build it brand new. where that's going to continue to drive any homes above $3,000 to keep going up. So you just have to keep an eye on where you're investing, and that's exactly what we do, is make sure you're buying the right types of properties that will rent out to cover those costs, or if you're buying a home for yourself, that is going to be a good asset and keep going up, basically.
Yeah.
Did I take yours part then? Oh,
I guess we could talk a bit about the segment in terms of the new build. So, when you look on Rent Faster in some of these newer communities, you've got 10, 12, 20 basement suites
Yeah.
for rent. So segment and area definitely matters, because you're not seeing as much of that in inner city communities.
Yeah, and just saying that we're building too much, too many rental units, too many housing, that's oversimplifies it. From an investor's point of view, there's segments of the market that you can go after that they're not overbuilding. Like Carly said, basement suites. If you can find a legally suited property, they're in huge demand right now. So you're not technically competing with these huge purposely built rental buildings. You're just competing with other homes in the neighborhood, other suites in the neighborhood. So for the investor, if you want to find those segments, it takes a little research, and we research the market every day to find those properties that are in demand for renters.
Mhm.
Okay, we'll move on to rentals. Why landlords still win, even with sorry, gotta get up my note here. Even with a little bit higher vacancy rate that we're seeing right now than we did in 2023 and 2024. So in 2024, the vacancy for purpose-built rentals rose to 4.8%, and it was at historic lows in 2022 and 2023 because there was no building going on during COVID. As we came out of there, there was huge demand for rentals. People were fighting over rentals. We'd have tons of applicants for every suite that we had come up and that our investors came up with. But it's starting to go the other way right now. We're starting to see a higher vacancy rate. And because of these new completions that happened in 2024, they're happening in 2025, and some of them are going to happen in 2026 as well. That vacancy rate is going to go between 5 and 6%. We anticipate right through the year 2026. So what does that mean for our investors? What it means is that you need to differentiate your rental from all the rest.
Yeah, that's perfect. So what Tim's saying there is you got to go back to basics. We wrote a book about this, Fearless Real Estate. And you know what? At the end of the day, you got to pick the right community. And when we're saying right community, what is the wow factor in that community? I know if you're in Lower Mount Royal, which is 5 blocks from us, you have 17th Ave, you have all the bars. I mean, you have breweries now. You have Trolley 5 just there. You have restaurants. Lululemon just spent probably a few $1 million renovating the old BMO that was on the corner. So you know what's coming to 17th Ave. It's going to continue, and it's going to be like Robson Street in Vancouver. So anyway, you have to be in the right pockets. If you're in Marta Loop, Marta Loop is another community that you got to watch where you are. But if you're close to walking to the Safeway or to the main strip there, people will want to live there. If you have something in the back of Beddington, it's going to be a little harder to rent out in these times and times ahead. So you really have to be somewhere where people want to live, it's attractive. If you're picking a condo in a particular building, it can't be facing the main road. Maybe it should be south facing, so it gets sun all day and it's bright. Maybe it should, be spacious and not closed in, like open plan living. So there's things that you have to go back to. And in this market, what's really cool about it is you have choice. So don't rush out there and buy things. And we see this all the time when the market softens. We see people having tough times renting properties out because there is no wow factor with that particular area or type of property that they're trying to rent out.
Yeah, and from a renter's perspective, the average rents in Calgary are still considerably lower than some of the larger centers across Canada. If you looked at the average rent in Toronto or Vancouver for a two-bedroom, two-bathroom condo compared to Calgary, roughly $1,000 more per month than you are here. So if you're remote working, like Carly was talking about, you can have a job in Toronto and work in Calgary and save yourself $1,000 a month having lower rents. And it's pretty much that way across the board of all the property types from Calgary compared to those larger centers. So what we're seeing is renters are also reaping the rewards. Investors are in the first place, but renters are as well. They're reaping the benefits of living in the city.
Yeah.
And as a long-term play, Calgary is still a great option. I had a client who he has a townhouse. He was trying to rent it, or he's been trying to rent it out for the last couple of months and having an issue finding. But I had to remind him that in the last 5 years, he's probably made between $50,000 and $60,000 on that townhouse. So having to carry it for a month or two to find a good renter for the next year is pretty minimal compared to what he was making.
Yeah, and we can tell you it is key finding that right person. You don't want to just throw anyone in one of your rental properties. I mean, we started Crew Property Leasing just to deal with that alone with our clients because they didn't want to deal with it. But we strive to get that person that's going to look after the property, and we would rather you have a vacancy for a month, get the right person instead of just throwing anyone in there.
Yeah, and we've been going through that with a number of the properties that we're leasing out for our clients in the last couple of months, because the vacancy rate has changed a little bit. We're seeing it takes longer to rent, and you do want to screen a little bit harder so that you don't have those subpar tenants in your property because you want to maintain its value over time, and getting that right tenant helps you do that. All right. We're going to talk a little bit about the affordability advantage of Calgary versus those larger markets.
So Calgary is, like we were saying earlier, much more affordable than Vancouver or Toronto, which is allowing people to get into the market. A lot of people can't enter the market in those cities. Young couples. I have a couple who recently just moved from Toronto. They were living in an apartment with two little girls, and they said, you know what, we work remotely. We're moving to Calgary. So they bought a great property in Bowness. They have a yard, and they were overjoyed because they never could have done that in Toronto.
Wow.
Yeah, and we've had a number of clients move from both Vancouver and Toronto just for the affordability. We've told stories about the fireman that we had from Hamilton who moved here, sold his house, bought his house with cash from the proceeds of that sale in Okotoks.
Yeah.
And it's just because of the affordability, the price differential.
Yeah, and for him, same thing, family, lifestyle, can do the same job out here and have no mortgage. Like it just makes sense, right? Yeah, it's a no-brainer. But at the end of the day, when we're looking at affordability, you might be sitting there saying, well, if rents are softening, how am I going to get by? You really have to study the market and work out where rents are holding. There are areas where it's expensive to rent out. There's buildings downtown that are expensive to rent properties in. So it's our job as investment focused realtors to find out where is best. And we're also looking at starter homes right now. We're realizing that starter homes, it's expensive to rent a full house, and people want full houses. Full houses are renting upwards of $3,000 to $3,200 a month. And with interest rates coming down, you can get starter homes under the 650 range right now in older areas, which we actually like. So that sometimes is more appealing. You're not dealing with two sets of tenants, you're dealing with one that is paying off your mortgage. And that market's going to continue to go up as well because that's the market that people are going to jump into.
Yeah, and demographics are also driving this affordability. When you have these young families moving in to the city, they're also attracting more people that they know. Their friends come, their families come to live here. And that demographic is, kind of driving Calgary's population. We have one of the youngest populations for a major city in the country. And when you get a young, dynamic population like that, they demand those amenities like a Lululemon, like a Starbucks in their neighborhood. So that helps boost the value of the communities that they're in just because they're living there. They demand those services that, young people who are, working jobs, making lots of money, they want those services. And it helps real estate investors with not only the steady supply of renters that are filling up their rental properties, but also driving the property values up, which we want to see over time.
Yeah, and just one last thing, the young people that are out there that Tim's talking about, some of them aren't even thinking about home ownership, which is just amazing. It's, you know, days are gone now where they're putting money aside and they want to own their own home. They're okay to rent. So we're moving towards, there's articles out there, we study this time and time again, that the renting is going to become more common. And so we're going to need more rental properties out there. And you know what? The landlords are going to benefit from that. So at the end of the day, buying that right property that people want to live in. And we always say this, if you're not cash flowing, you're not trying. So there's multiple ways to earn money in real estate from your real estate. You can Airbnb it, you can do student rentals. Student rentals, there still is, even with all this housing out there, there is still a student rental crunch out there. Like and I don't know why the universities don't really provide any housing. They're on their own, right? When people come here.
There's
So
some housing on the universities here, but it's not like
it's not like,
some of the big American cities or
yeah,
down eastern
dorms
Canada.
and stuff
Yeah.
like that. Yeah, so you know what? This year we bought it was his first property in Dalhousie. We brought a young school teacher, actually his first property. It was a half duplex for $540,000. It had 3 bedrooms up, 2 bedrooms down. It was older, but he actually rented out each room to 4 students and paying $1,000 each. So now he's making enough money to move into or gradually move up and get his second property. So that's just one aspect. There's furnished rental properties, executive rentals. And so there's other things called rent to own where you can help people. And I think rent to owns is going to be on its way back in, where you actually help tenants rent from you and they eventually own. They pay you a deposit, they pay you rent credits above the rent. So you make good cash flow while you own the property and then they have the choice to buy it at the end. So there is multiple ways to invest in real estate. It's just picking the best strategy for you.
Yeah. So now we're going to talk about the city and the infrastructure that we have going on. And this is very, very important when we're talking about 2026 and beyond, actually. It's the amount of building that's going on to allow for this city to grow into the future. All you have to do is look at all the road projects going on, expanding Deerfoot Trail, the ring road that was finished. We have this massive spending going on into infrastructure so that we can handle all the migration that's coming in. If you look at our population now, we mentioned it was about 1.6, maybe a little bit over that. Our transportation system can actually handle over 2 million people in this city.
Wow.
So we're building in anticipation of the increased population. And other things that the city is doing is the densification. Some people don't like this subject, but it's something that has to be talked about, something that we have to deal with as a city, because we can't keep sprawling eternally out and building new suburbs. Some diverse or densification has to go on because, if we want a vibrant downtown, we have to have people living near there because they can't be commuting for 4 hours to get to a job that they're going to spend 8 hours a day and then commute another 4. So that type of growth has to go on. Now, how we manage that as a city, it's going to, swing one way or the other. We had a city council before that just brought it in. This new city council wants to change it or get rid of it, but the city has to deal with it, and we are dealing with it with our infrastructure growth.
And just touching on densification, I want everyone to do a little bit of homework tonight or tomorrow. Just go online and look at the map of Winston Heights. If you don't know where it is, it's just east of Deerfoot. What would you say, north of
16th
16, the number 1, and up to 32nd, basically.
Yeah.
So Winston Heights, it's siding onto light industrial, like you have car yards in there. I don't know what else you would have in there. You have a little brewery in there. I know that. Been there for lunch, which is great. But you know what? They had older houses in there, rundown houses. Tim and I were there on the weekend because we had a flood in one of the properties there. And I've got no doubt we had the flood in that basement there because right next door, what did they build, Tim? Right next door.
An eightplex.
An eightplex. So a brand new eightplex. And this thing is massive. Like when they're building these things, they're like 10 foot each story, right? So They're so high. And then, you know what? We were buying in Winston Heights a couple of years ago. There's a video on our crew TV where we bought on the ugliest street in Winston Heights. I swear there was crack houses across the road. We were watching deals happen while we were there, and we were in a brand new infill basically. And we bought that for like 580,000 for one of our clients that knew exactly what he was doing, getting into an area that was changing over. And this is a great example of densification on how communities change over. And you drive into Winston Heights. I know Nico Street right now. He was, there was only probably 3 or 4 infills on that street.
Yeah.
Now the whole street is all infills. And then you go down the hill where we were yesterday, down the bottom of Winston Heights, closer to the light industrial, and they're building brand new fourplexes, eightplexes, tenplexes. And so if they're doing that, you're going to see more and more, and you're going to see communities that had problems, like Winston Heights down the bottom. It had drug problems, it had a little bit of prostitution, and you're going to see areas like that get cleaned up and turn over like that one is. And that's a beautiful example.
Yeah, and while we're talking about infrastructure, if you're a new investor out there and you want to find a neighborhood that you want to invest in, where you're going to buy, all you have to do is follow the building that's going on. You see the city densifying areas around LRT station. You see condo buildings going up there. They've relaxed the zoning around those places. So if you see all these condo buildings going up around an LRT station or an employment hub like a hospital or a shopping mall or something like that, that's a good place for you to invest, but not in the type of properties that are going up. If they're all these purpose-built condo buildings are going up around that station, why don't you look for a suite of property around there? Because you'll have a different property than all the ones that are out there on the rental market. All these people who live in these small, high-rise or low-rise condo buildings, they're all the same. Nothing differentiates them. But if you have a suite of property a couple of blocks away, you can attract people with dogs. That would be a backyard to your suite of property. You can attract people with cars. They might want to park 2 cars in the driveway or in the back in a parking pad, whereas you can only have one parking spot in that apartment complex. So looking for places to purchase, all you have to do is follow the infrastructure development and see where the builds are going on. If employment centers are being built, that's a good place to invest in, but make sure that your property that you're investing in has some sort of wow factor. All right, so there's another thing that we're going to talk about is municipal planning. As we said, the city is waffling on the zoning changes. So we'll wait for that. We'll see what plays out in 2026. But regardless, keep an eye on municipal planning because they do think long term and they do, plan for things like the new arena that's going to be or is being built in the Stampede grounds right now. And there's going to be all kinds of restaurants and hotels and stuff around that. So if you keep an eye on municipal planning, you can keep an eye on where the next employment center is going to be and where rental demand will be. Okay. The next one, risks and mitigations. You have to think about risk when you're investing in real estate. And like any other year, 2026 has certain risks coming with it. Probably the biggest risk is what's going to happen south of the border with Mr. Trump there. We never know what's going to happen. So we never know how our economy is going to be affected. But we have to think about that. You have to think about risks like oversupply, right? Is there going to be too much purpose-built rentals units being built? Is there going to be too much new communities being built? Is the vacancy rate going to go up? Are rents going to go down? You need to think about that as we move into the future.
Yeah.
Yeah, with so many rentals being completed, it's definitely a risk for our investors now. But working with us, obviously, they are going to be prepared to have some vacancy and a plan. And they are going to be choosing in communities that are not going to see as big of a vacancy.
Yeah, and we also have to think about economic risk and location sensitivity. I talked about that, about where the newer buildings, newer condos are being built, to not buy or not have your rental property in a building right next to a purpose-built building. You have nothing to differentiate your unit from something else. Again, Commodity dependence. Does Calgary's economy depend too much on oil? We talked a little bit about that. Energy goes through cycles. Oil goes up, oil goes down. I think right now it's at about $59 a barrel. Might be going down a little bit, but there are external factors around the world that are going to affect that we cannot affect or we cannot do anything about. So we have to keep an eye on other segments of the market. If you're close to a healthcare center, if you're close to a hospital, guess what? There's always going to be demand for hospitals. So there's always going to be demand for housing around there. So
Yeah. No, Tim, and you're right. Like even if you're around Sea Train Station, people moving here from Ontario, they're used to jumping on the train and going to work, or from BC. So just having properties that are walking distance and making it easier to go shopping or to go grab a coffee or get on the train, all of these things really help with, making it successful. Is there risk? Yes, there's always risk, but you can definitely limit them. And what we're even doing with our clients right now is if we know they've got a rental property that they were charging way too much rent for, we would rather our clients get in front of the market conditions and say, hey, you know what, we're going to knock off $50 a month on your rent. So you hold those good tenants. At the end of the day, you want to work off worst case scenario. We always say that your bottom rents. What are the bottom rents? And to work that out, you have to go on Rent Faster. You have to compare apples to apples. You can't compare a house for rent on a main road compared to a cul-de-sac or close to what we're talking about, transit or shopping or schools. So you really, really have to work out those numbers. We help you with that. But you have to run off those worst numbers. And if best case comes, like it did last year, I mean, best case, people would tell us, "Oh, I'm getting this much rent, and it's great," and we were saying, "Don't charge them too much," because what happens is soon as what Tim was just mentioning, a purpose-built rental comes on building and they're cheaper, then those tenants just look at that and they're gone, right?
yeah,
And even if you're just renting a garage out, if garages are cheaper right now somewhere else, I mean, they're just storing stuff, right? We had a garage in Mackenzie Town renting for $400 a month for the longest time, and the guy just pulled his stuff out, and I'm pretty sure he's just found somewhere cheaper. And so why would he rent our garage?
yeah.
You know?
Yeah, so there's always going to be risk in any investment, but what we want to do is help our investors mitigate that risk. Like as I said, you need to run your numbers off worst case scenario before you even buy a property, and you need to, focus on purchasing in the right areas, the right properties in the right areas. So you mitigate that risk. You're not totally dependent on the fluctuations of the market.
Yeah.
Chat in the question in the chat, several new large format logistics buildings are opening in the next year in Balzac. With a fifth Amazon site alone will employ 1,500 people or more. That's what we're saying.
Yeah.
In the Northeast there's these massive warehouses going in. If Amazon's making that kind of investment in Calgary, then guess what? They think there's a future for Calgary.
Mhm.
And we're seeing the same thing with de Havilland. They're building an airplane plant just outside of the city, but guess what? It's within driving distance. So people who work there are going to live in Calgary. CN, I believe, is building a huge logistics center to just east of the city. All of these big companies investing in Calgary mean that they're bullish on the long term of the Calgary. You don't build these big Amazon warehouses thinking that Calgary's economy is going to crash next year. They believe in Calgary, and that's why we believe in it as investors.
Yeah, and you still have to have a look at supply. I know Airdrie, I think they called it the fastest growing city in Canada. It went from something like 18,000 people over, I think, a 10-year period to 80,000 people. You still have to look at the supply level. So that's going to impact the rent you can achieve and then the growth you're going to get from that property. And if they're oversupplying and oversupplying, and the thing that scares me about like north of Calgary, either northeast, northwest, and then south of Airdrie is that it's just growing and growing and growing. So, and the way they're building up there, some of these things aren't appealing. So we'll just get into that quickly. I know Carly was talking about the basement suites in newer communities. we went online to see, someone called us to rent out a basement suite not long ago, and we just said no, we can't take it on just because I think Tim went online to see what the rentability would be like, and there was 21 other basement suites. Now, it's not about basement suites. The problem we had is when we went up there to look at this property, there was nowhere to park. They're building these streets or these homes on streets with front driveways, and then they're putting suites in the basement, so every second house has a suite. And because there's front driveways, there's nowhere to park, like at all. There's no back lane, so you're not parking back there. So people are just going to get fed up with that and then not want to live there anyway. And then buying in a new community. So a lot of people from Ontario were buying brand new properties in these new communities, and now they're losing on them. And it's because they were speculating, first of all, and no one really wants to live like in a brand new community. You're dealing with construction. Normally the schools are like in the next suburb, or even the Safeway is in the next suburb because it's not even built yet. So you're putting up with that for a number of years, and that's just dropping prices everywhere. So you got to just keep that in mind. Yes, we love what's happening in the chat here with this comment with what's being built, but at the same time, well, what are the best communities around now? I know if you go on the east side of Deerfoot, we could tell you that nearly every house has hail damage. So, that's one thing, that's another concern. And that hail damage, well, we didn't realize if you're living in those postal codes, um, you know what? The insurance rates have just gone through the roof as well. So those people have to deal with that.
Yeah, so there's another comment in the chat about Calgary's advantage over a place like Vancouver for these supply chain centers and logistics centers, and our third runway at the airport. So there's a lot of factors that are positive and attract these people or these companies. So we're going to move on from risk here and just talk a little bit about some of the strategies our investors are going to use in 2026. Carly, can you take it?
Yeah, we love the value add. So buying something that needs some work, putting that work into it, whether that is a basement suite, which is always great. Maybe you've got something that has an illegal suite in it and you're making it a legal suite, or something that's just completely dated. I have a client who just purchased in Fairview. Purchase price was $530. He'll put about 100 into it, and it should be worth $750 on the low end when he's done. So the value add is a great way to be making money.
Yeah, so you've got clients that do that just to flip and they also do it to hold.
Both.
So yeah, so can you, I don't know, give us some numbers on say what it would be to flip a property in a community like Glamorgan or Richmond Hill, something like that?
Yeah, I mean, it's completely dependent on what kind of work you're doing to it, what scale you're going to it. But if you're taking kind of a basic bungalow, 1,100 square feet, and you're doing the top and bottom, so say you're doing it as just a single family home, you are probably spending to do it properly, and typically most of them need some work structurally. If you're going to be removing walls to open up like the living room kitchen area, you're probably going to be spending about 150. But those houses right now, I'm seeing them for 650 and even below 650 right now, which has not been, I haven't seen that honestly
Yeah.
in months.
Yeah, and what's really funny about this is people out there will either rent or pay top dollar for a fully finished product. So there is a big demand in properties with properties in the city. When we say in the city, within 20 minutes of downtown, and you could be all the way up to like Scenic Acres in 20 minutes. Like it's pretty far.
Yeah.
You could be down to Canyon Meadows in 20 minutes. So we're talking south and north pretty far. But at the end of the day, we know there's a demand for a product that is looking like brand new, like a new show home, but in a city because you have parks and you have schools and you have hospitals and you have everything around you. So what people have to realize is by adding value, it means you're creating equity. When you're creating equity, you then can get to refinance that money out and replenish your capital to go again. So add the add value strategy. We love it. And it could be as simple as adding a basement suite. We've done that time and time again this year. We plan to do a lot more next year. We're actually going to document these renovations going forward, which is exciting for you guys. We're going to get more involved on our crew TV, showing what we're up to, what our clients are up to, what renovations they're doing. And then the best thing about us, showing you the costs involved as well. And for example, we are working one, we just closed on one in Willow Park. And on the same street, what did you pay for in Willow Park? Do you remember?
It's 585.
Yeah, in the 580s. And on the same street, there's a renovated property selling for 900,000. So we're just putting a suite in. We're not planning to flip it or sell it. We're just planning to put the suite in, legalize it, refinance that money. We already figured that we cut the budget off at about $120,000. And we already figured that at the end of the day, the property will be worth a minimum 750 to 800,000. So then our investor, and it's not his first time, he's done it multiple times. Our investor will then go again and repeat. So it's pretty cool that you don't have to spend that much money if you don't want to. You could just buy correctly in a community like Fairview or Willow Park, the two communities we're talking about. And there's many, many other communities. I mean, our first seminar of 2026 is all about best communities to invest in for you guys out there that want to join us. And we go through community by community, but we actually go through the differences on finding these areas and working off, what will sell, what will it be worth, and how much money we should spend on that particular add value.
Yeah, and another strategy that our investors are going to get into in 2026 is the what we think is the number one strategy to build your wealth. It's the long-term hold. You can't go wrong with the long-term hold in Calgary, as we saw early on in this slide presentation with the steady growth in average price we've seen over the last 20 years. Basically, you're just buying a property, renting it out, and holding it for the long term. Now, yes, you have to maintain it and you have to put the right tenants in it, but it's the number one way to increase your wealth very, very passively. And we can talk to our investors or ourselves about renting out a property and how much time you spend on that rental property every single month. It's very, very minimal, especially now with direct deposit, email transfers. You're not even going to collect the rent. You're not even depositing a check in your bank account. Everything's digital, so the money's transferred automatically. And you're probably only visiting the property if there's an issue or driving by it just because you haven't heard from the tenant in 6 months.
Yeah.
I mean, you've been through that where you haven't been to properties in a year.
Yeah. Well, I owned one. I didn't go in there for 20 years. So I'm not saying do that, but you know what? At the end of the day, long-term holding properties is the way to create wealth. And you should have, I mean, we've got a diversify within Calgary, but you should have a diversify within your portfolio. Like I've got some properties that I know as soon as I can, I will take that money and upgrade my portfolio. I've got properties that I could renovate if I choose to add more value to. I used to have suited properties. We tell horror stories about those all the time. And I got out of suited properties. I only own a limited amount now, where I don't want to deal with tenants anymore. So you can do multiple things within your portfolio and then diversify within Calgary. We love the move up program. The move up program that we do for our clients is, our clients move into a property, they can put 5% down, and then when they choose to move out, they rent out either the whole house or they put a suite in the basement and they rent out 2 suites, and then they can go put 5% down again. So that way you're saving on your capital and you can buy multiple properties. So it all depends where you're at. At the end of the day, our clients, we aim to make them minimum $1 million worth of equity at the end of the day. And these days, it only takes up to 3 properties really to get there. There is a sweet spot, and we have to quickly talk about that. When you are investing in real estate, we find when we go over 650,000. Now, it all depends because the luxury market, there are good rents in the luxury market. I mean, you could probably go up to 800,000. You'd have to put maybe more than 5% down, like 10, 15% down, but rents could cover those costs. Carly had an executive Airbnb renting out at $600 a night this summer. So, so there's multiple ways to do it, and it's up to you. But diversifying with your portfolio, starting off small, we always say that it's not a race. You can upgrade your portfolio over time, buying in the right areas. And you know what? We love what's going on in Calgary because, say, just take townhouses, for example. They're not building townhouses like they used to 20, 30 years ago. If you go into a brand new townhouse complex today, you typically have to go park out on the street because there's no visitor parking. There is no green spaces. I mean, even the driveways today on these townhouses,
Yeah,
you
they're
can't
not
even
long
fit a
enough to put a
car.
car in.
You can't even put a car in. I mean, so it's crazy, right? Whereas the older ones, say in Acadia or anywhere, Canyon Meadows, wherever you go, right? Braeside, could be anywhere. The older townhouse complexes, everybody got a stall, there's green spaces, so someone has a dog. People actually get a backyard. They used to build those townhouses with basements. These days, they're stacked townhomes, so you don't even get a basement. You actually get a neighbor below you. So they're not building them the same, So at the end of the day, buying these different types of properties, some of these properties are just going to continue to go up, especially when we know townhouses. I got buddies in Vancouver that live in townhouses, and I could tell you they started at $1 million and they're within 20 minutes of the CBD. So if we're talking here in Calgary, you can get townhouses. I'm thinking low 350s, the older ones right now. It's a pretty good bang for your buck.
Yeah, and the final thing that we're going to see some investors get into in 2026 is multifamily. Now, again, this is most likely the experienced investors, those that are a little more higher net worth. But multifamily does offer you that opportunity to have, more units within the same building. So your economies of scale kick in. You've got more rent coming in the same, say, footprint that you would in a single family home. To do this, you need either a commercial loan if you're over 5 units or lots of cash. So to get into multifamily, we always have a lot of new investors that come to us and want to get into it right away. We usually start off smaller, and then as you get a little bigger, we were actually in a fourplex just the other day. We've got a client who is buying two sides of a duplex and then putting legal suites in the basement, creating actually a fourplex, putting tenants in them, and then either selling it or doing the BRRRR, refinancing it and going again. He's been doing it for many, many years. So that multifamily strategy works for him. And we're seeing as more and more of our investors start to get more and more net worth, they're getting into it as well. One thing we won't go into is the sort of low mid-sized buildings. Because we've seen the cost of them just go through the roof. We tried to do it in Edmonton a couple of years ago, buy some buildings, but because the supply of them is just not there, the price is way too high in Alberta.
Yeah, and just talking to Edmonton, because I know someone's going to say, "What about Edmonton?" There's too much supply going on there. They're building this MLI Select program with the fourplexes, eightplexes, 10, 12 units. It's going crazy. And they had a problem before this with lots of multifamily anyway. They have communities that are multifamily. I mean, we were looking at buying apartment buildings up there a couple of years ago, and we just were like, well, what makes this building different from the building next door and the building next door and the building next door to that? So they had a problem. And then the other thing with Edmonton that we didn't love is that there's a lot more low income there, basically. So the rents cannot sustain itself. The rents went up there like Calgary, but it will come back as well. And the problem with that is the building costs stayed the same. So if you're building right now in Edmonton, you're building that product for the same price you're actually building here in Calgary. Yes, the land value will be different, but the building cost itself to get it up off the ground will be there. And I just don't think the rents can sustain itself up in Edmonton.
Yeah.
Time will tell.
Okay. So we're going to talk about market timing and exit strategies now. Take it away, Carly. We won't cut you off this time.
So when the supply is high, that's when there's deals to be had, and that's what we've been seeing in the last couple of months. You guys had some great success in, was it Southwood where
Yeah.
you purchased?
Yep.
Yeah.
Yep.
And you got that one for like $100,000 under the city assessment. So there are some really good deals to be had right now.
Yeah, and that's what we love about this market. We always say don't time the market, it's time in the market. But if you are going to time the market, we believe from here till we don't know how long it's going to take, but we believe the spring market, once the weather turns, we will be back into a normal or somewhat normal spring market. So we believe from here to spring, you're going to see properties come on the market for a couple of reasons. There are the mortgages from the COVID mortgages, we can call them. The COVID mortgages coming due. I know I've got a couple of them. So they're coming due all the way up until May, June next year. And so what that does is whoever was locked into these rates, I could tell you one of my mortgages is going to jump $1,000. So I think that property cash flow is about $1,800 a month, but there goes $1,000 of that, right? So that's just what's going to happen. And if some people stretched out to buy their homes or they stretched out on an investment property and the rents now are dropped and they're not covering, those people might decide to sell. So that alone is going to keep the supply healthy. And then in this kind of market, what we love about it is you can take your time. You can go out and see 5 or 6 properties. The property Carly's talking about in Southwood that we got 100K below list price. It was a turnkey property. That couple moved here from Ontario. I think we showed them 6 properties in total. And when we walked into that one, we realized it had air conditioning, it had a brand new garage, it had a suite in it that no one was using. They're not even going to use the suite. We're going to legalize it while they're living there. And when they move out, it will be a suite property because it's walking distance to Heritage Station. You can walk across the bridge to Superstore. The new London Towers or the London stalled London Towers are going to go up soon as
Well, no,
well.
there's a development right beside the London Towers that's going up.
Oh, is that what's going
Yeah,
up?
so in that vacant lot used to have that old water slide.
Yeah.
Might have been before your
Oh,
time.
no,
There is a
no,
water slide
it was there.
beside the London,
Yeah.
and that's the land that's going up on, and also where the old Y was, the
Yeah, that's
YMCA
what's going there. Yeah.
that was torn down a couple of years ago. There's another development going there.
Yeah, so you're going to see that area change over. It's a good pocket of Southwood. We're always wary. Southwood's one of those communities that if you go further to Southwood Station, Southland Station, is it?
Yeah.
Yep, Southland Station. It gets a little bit mucky down there, meaning there's a lot of purpose-built back in the day rentals.
Yeah.
Like they're side-by-side duplexes that are run down and there's streets of them. So, we kind of tend to stay away from that end and we invest up the other end. So just in saying that, there are great deals. And if you get a good deal and you buy now, it's already proven. This is what I love about it. And this is what we say about the Northeast, like communities like Marlborough, okay? It's already proven that prices can get to 600, 650,000 in Marlborough, right? And they're already coming back down to under 600, 550. And same as Southwood. We just bought one $100,000 under list. So the market's already told us that these communities or these types of homes have already been at this value once before. With what's happening with Calgary and what we're going over tonight, it's proof in the pudding that those prices will come back. So you're already buying into something that's already achieved it. You're just waiting for that to happen again.
Yeah, and what you want to do during that buy is you want to figure out your potential exit strategies. Now, we're not just saying, have one exit strategy and use that one for the life of that investment property. No, you're going to have to, we counsel our clients to buy smart. Buy a property that has multiple exit strategies. Is it on a 50-foot lot that you can tear the property down in 20 years and build a duplex on it? Can you, put a garage in the backyard right now? Is the yard deep enough that you can add value to it right now? So you need to think of those exit strategies and not buy just single-use lot properties. We used to buy, I bought a few of those back in the day
Mhm.
just because of the price, because of assumable mortgages, things like that. But with just a single use property, which is what you would say, single family home on a property that's 35 to 40 feet wide
Mhm.
and maybe 80 feet deep. It's not like you can do many things with that piece of land down the road if you take the house off of there. So we like to buy properties that the lot is big enough to do something with it, and it's in neighborhoods that allows for that kind of thing.
Yeah, I'll give you guys a good example. We bought a house this year in Royal Oak. Now, Royal Oak is a single use community, right? They're all kind of like cookie cutter homes back in the day, and you really can't do anything. But the house we chose in Royal Oak is on it's on the drive, basically. What would that be? Royal Oak Drive or something like that. But it's
One of the Royal Oak
one, yeah, it's
main drags.
one of the main drags coming off Country Hills Boulevard, up where the Walmart is, and you turn left in there. And anyway, we bought a massive bungalow on a corner lot. And this corner lot is so big that you could build one day. And we bought this for $550,000. So you could tear down this house. Not that anyone in Royal Oak would be happy with. I'm going to be honest about that. But you could. Our clients bought a piece of land in there. It's a suited bungalow that's rented out, covering its cash flowing. They could sit on this thing for 10 years, and in 10 years' time, if they really wanted to, they could go in, knock down that house, and build probably a 10-plex. That's how big that lot is on the corner. So even though that is in a single-use community, with the rezoning that's happening, and not everyone's happy about it, but because this land was purchased so cheaply, that is a possibility for that property.
Yeah, so that exit strategy is very, very important to think about during the purchasing process. Same thing as your analysis is being done during the purchasing process. Okay, moving on. We're going to look at, sort of conclude with what do we think Calgary is going to do in 2026 and beyond?
Yeah.
So one of the things that we see Calgary is it has its growth built in. Like we talked about earlier, the population's growing, the infrastructure is being built all around the city. So that's growing the city physically. And it's maintaining its value. You don't see Calgary's a city in development. It's not a city in decline like some of those older cities in the Midwest in the United States, where they reached a boom during, the steel boom in the 40s and 50s, and then they went into decline, and then a lot of houses are getting torn down. The population is fleeing the country, fleeing the city. Calgary is in a growth mode, and we see that happening for years and years and years to come. So, as an indicator of where would a good place to be a real estate investor, just that growth alone is very positive for our investors. The next thing is uh, the yield that we can get from our investments with the steady increase in property values. So we generally go off a 3.5% increase in average price when we do our analysis, because that 3.5% is Calgary's 75-year average. The last 20 years, we've seen a more 8% per year, but we still do our analysis on the conservative number. But when you see a yield like that over the long term, you're looking at a property priced at roughly 400,000 today being worth 1 million in 25 years. And we did a big analysis on this in our in-person seminar, but over those 25 years as well, the mortgage on your property is being paid down. So you have a free and clear property worth $1 million in 25 years in this economic climate in Calgary right now. So
Yeah.
that's what we're looking at in 2026 and beyond for our investors.
Yeah, and we're super excited for next year. We think it's going to be great, not only for our investors, for the city. I mean, you're going to see people keep moving here. You're going to see, I think we're going to see a major shift in the landscape in Calgary with the amount of building that's going to be happening. And so you have to get it right where you're purchasing. That is key. Like, you can't be buying a condo downtown because they're going to be building a bunch more. Things like that, buying in areas that people want to live in, and understanding what's going on in those communities, and understanding the infrastructure that's being upgraded is something to keep an eye on as well.
Yeah, so that long-term horizon, Carly, what are we looking at?
Well, it's not a get rich quick, like you said. We're looking at steady growth and we're looking at that to continue.
Awesome. So that's pretty much concludes what we have to say about how the investment climate for real estate is going to be in 2026 and beyond. It was a lot of information. Thanks for bearing with us. We also had a little blip with our invite code there. But one thing we want to do is any investor that wants to invest in Calgary, we're here to help you out.
Mhm.
All you have to do is reach out to us. We'll set a meeting and we can help you attain those real estate investment goals in 2026 and beyond.